Good morning, traders. Welcome to the TMT special edition video on gold. Getting a lot of emails about covering gold. If you could do a video, I'm doing a free video here, guys. We offer gold, oil, and the indices, professional institutional research for you to trade off of. So come check us out at tradingmarkettechnicals.com. Go peruse our website and you can see all of the videos that we do. And this will be in your inbox in the morning. So I'm doing a free video tonight. There's a lot more content in the premium video, and of course our institutional services that we offer for research. So let's get right to it. Got a lot to talk about. All right, so I want to cover gold. Gold is coming into the sweet spot, but I do believe we're going to get one more flush. And we have December 16th is a FOMC rate decision, which we believe that they're going to go for 25 basis points. And I do think that it's priced into the market as of right now. So that should move gold, of course, equities as well. But I want to start off with the GDX GLD ratio. And you can see here, it didn't catch the bottom, but it caught just this little acceleration here prior to the big move, right up in here, just before a little after February, when we did bottom in late January. So we are now crossed over in September, and we still haven't gotten across. I think we go lower. I think we get somewhere between a 50 to 61.8% retracement before crossing back up. Now we could start heading to the upside even as price goes down. Remember, it's a ratio between a GDX and GLD, but very accurate. But it's like a tanker; it moves very, very slowly. But I just want to show you where we are here. Next is going to be the bullish percent GDX. Okay, it's a gold miners index. The bullish percent gold miners index, excuse me. But GDX is the ETF for it. You could see that there's only 21% on a point and figure buy signal, and when you get into these washout areas here, in basically in the basement, okay, that's where you get a nice big reversal. Okay, we're not there yet. I think we go down one more time and maybe touch this low and then start to really excel higher. So we're getting close to really triggering a buy signal in gold. Okay, now let's take a look at the weekly chart of gold. We had the 61.8% retracement here off the weekly. This is from the low of 2015 to the high of July, and sure enough, we're back down. We broke below that. I do think you're going to see 1120 to anywhere really between 1080, 11, or 1120. It's going to be the sweet spot. Let me show you the daily chart. Daily chart of gold, we took out the 61.8% retracement, so that's it. That level was lost. Here's that thin zone that we talked about. Look at the Chaikin money flow. You can see here that money flow is coming out in a big way. Now, you can see how we literally just kind of sold off here. But if I blow this up, I want to show you, here, one more. Let me just increase that up a little bit. All right, there we go. Now, you can see if I blow this up, you see that money flow slowly starting to come back in here, okay? And we didn't get our PMO buy signal. This is a price momentum oscillator here, and we still are on a sell signal here, but we're starting to curl up here. So we're making some progress, but we're still really, I think, hanging. We still have to let some of the weak longs out of this market in gold, and I do believe that 1080, 1100, or 1120 is going to be the spot, guys. That's really what's coming down to right here. These are your three areas, okay? Next is going to be the GDX. I want to show you the gold miners ETF, and here's the bullish percent GDX. I show that to you on its own chart, but I wanted to show you here. Now we're starting to pinch here, so we can close out of that band this week. A couple of days of momentum. Here's a GDX GLD ratio. Again, showed it to you already, but I want to show you that we're curling back down again. Not a good sign. So I think that we'll get one more push. I'm looking for anywhere between $16 and $17 in GDX. Okay, again, doesn't have to get there, but let's take a look at the daily chart. Here's the GLD now. So if you're trading the GC contract, the futures contract, 1080, 11, 1120 are your three downside targets to start nibbling in. GLD, I'm looking at 106 to 107, 108. Those are going to be your band here of support. You see that we have washout readings in RSI. MACD's starting to turn positive here, starting to curl back up again. But I do think that we'll get one more push. Will get us outside that band. where we can start nibbling in the GLD. And if we do move lower one day, we'll probably get some follow-through days, and then that's when we'll start looking to nibble in the GLD. Here's the GDX in a different, and this is based off our Pro Trader Premier videos that we show you. And you can see here, same thing, $20, you lose 20. Here's that thin zone we were talking about. We're looking at the 76% retracement of $17, and then ultimately, guys, that the washout is $15, $15.20. Okay, so you can see that we're curling back down here. So nothing really good about the GDX at all. Okay, and that's pretty much it, guys. This is just a 15-minute chart of the Qs. We wanted to show you that we also cover indices as well, all of the 4 indices. We cover NASDAQ, as you can see. We cover the diamonds. We cover the S&P 500 as well, and the transports. And we also cover the Russell. So keep an eye on it. Watch that gold. Gold's going to be a big mover this week, guys. Be safe out there. The market's a little nutty.